Good morning. We're half an hour from the open in Hong Kong, Shanghai, and Shenzhen. You're watching the China Show live from the HSBC Global Investment Summit taking place here in Hong Kong. I'm David Ingles with Rebecca Choong Wilkins.
Good morning. Our top stories today. Cautious trading in Asia after U.S. consumer sentiment falls to its lowest in years. Copper is climbing to a record on tariff bets and a halt in Chilean shipments.
Now, we're looking at Chinese tech stocks very carefully and closely today, nearing a technical correction. But Morgan Stanley sees plenty of upside with an upgrade of its index targets after some strong earnings.
Also ahead, oil is in focus today as the U.S. brokers a Black Sea truce between Ukraine and Russia, with the Kremlin saying its participation depends on relief from sanctions.
And I'm Stephen Engel on the tropical southern Chinese island of Hainan, where the annual Boao Forum for Asia is underway with Trump's trade war and Beijing's stimulus plans in sharp focus. We'll hear from China's largest smartphone maker, Vivo, the COO, in an exclusive chat, as well as have an exclusive conversation with Andrew Forrest coming up this hour. He, of course, is the executive chairman of the Australian miner Fortescue Metals.
Good morning again to all our viewers joining us across the region, and thank you for taking the time. We're here live at the Bloomberg China Show at the HSBC Global Investment Summit. It's day 2. We've already had some really good conversations earlier on with the bank's head of markets, global markets, and also the head of institutional wholesale banking. Just to get you guys up to speed, right behind me, that is not a silent rave that you're looking at right now. So the tech is out and about here at the conference right now, so we don't have to really talk over the crowd. Taking place right now inside the room right next to us, and that's what people are listening to right now, is Mario Draghi. He's speaking, and of course our co-anchor, Jomana Bercecci on the floor there inside. Really discussing the state of the global economy, and we'll get you guys up to speed, of course, and the headlines coming through out of the room right beside us, Rebecca.
Yeah, it's been really interesting. I mean, one thing that struck me a lot about particularly just conversations with people on the floor here, attendees who've been coming really for years, is the difference of the backdrop because really of the rally that we've seen in the Hang Seng and in Chinese assets generally. I mean, that has really changed the tone of a lot of conversations here, even though, of course, we are counting down to these reciprocal tariffs by Trump on April 2nd, but it's just changed the whole tenor and the tone, the nature of the conversations. It's a very, very different lens than we had this time last year.
Absolutely, and I think that's really what's standing out as the common bright spot within the conversations here. So this revival of, I guess in some ways, early animal spirits here in this part of the world. And I think to Rebecca's other point there, the other thing that's come up, and I think they're talking about this on stage as well with Mario Draghi, is just the level of uncertainty outside of external shocks like a GFC or a pandemic. The level of uncertainty right now among clients and the bank's clients is almost at comparable highs to any event, of course, outside of those shocks as well.
Yeah, I mean, and a lot of the conversation is focusing on this sort of recalibration.
Yes.
How do we recalibrate to understand the realities? Of course, uncertainty has been the other sort of big watchword here. Yeah,
in fact, we'll get more details on this coming through across multiple interviews here with Kellyanne Shaw, of course, and other guests coming through throughout the course of the next 60, 90, and I think we'll be here for 3 hours actually today. In the meantime, let's get a sense right now of how markets are faring. We mentioned this technical correction that we might be upon us when you look at the Hang Seng Tech Index, and Avril Hong, of course, is looking at markets for us. Avril.
Yeah, looking at markets and looking at the two of you, I like the new look. I see you all have switched it out on day 2. But, we're seeing that positive performance still carrying on from yesterday in Asia's markets, and this is despite the tariff overhang. And U.S. futures, we also saw on Wall Street how, there was a bit of a pullback, but they're still pointing higher. So this is coming despite what we see in terms of the economic outlook, right? U.S. consumer confidence dipping to the lowest level since early 2021. Really that tariff overhang that's casting a cloud over consumption. And I think on the 10-year, you're seeing a bit more of that caution. But, all this really doesn't quite bode well for the outlook in the global economy. Despite that, flip the board. If you look at Dr. Copper You can see how U.S. Copper prices overnight really hit those record highs. And this is, of course, against the backdrop of a bit of a disconnect with the London prices and futures elsewhere. But it's really about traders kind of bracing for these tariffs. We're pointing higher as well, looking higher on some of these copper stocks. Flip the board again. Take a look at how we're shaping up for trade in China today. You guys mentioned how we're watching out for the Hang Seng Tech maybe correction. The concern has been about these cash calls. It's also been about, when you look at some of the comments that have been coming out from tech leaders, from the likes of Toit, talking about perhaps emerging bubble in AI data centers. Does that keep a lid for a second day? Futures pointing upwards. This is what we're seeing. That's the setup for now. Rebecca.
Thanks, Avril. Of course, we're here live at HSBC, but it's a really jam-packed day for conferences across the region. The Boao Forum for Asia begins today on the southern Chinese island of Hainan. We have a forecast released by the forum that show an upbeat outlook for Asia, despite some of the global uncertainty, chiming a little bit with what we're hearing here. Our chief North Asia correspondent, Stephen Engel, joins us now from Hainan.
Yeah, there's just a flurry of different events here in China, as some of the people that I've talked to, whether it was at the China Development Forum or after the offshoots of the National People's Congress, which was earlier this month, and now here at the Boao Forum, is that there are some green shoot signs of recovery in the Chinese economy, but still, those external shocks, as Li Choong said in Beijing over the weekend at the CDF, the China Development Forum, they are expecting the shocks from abroad to be greater than expected. So that it's all about risk mitigation for the local economy, building on the strengths of efficiency on their industrial base, and also leveraging AI and boosting domestic consumption. So that's what everybody is talking about right now. On that theme, of course, we did yesterday talk exclusively with the COO of Vivo. You might not have heard of it. Maybe you probably have if you live in China, because it is now the #1 smartphone maker in China. They surpassing Huawei, #2 in 2024, followed by Apple. There's Honor and Oppo. But this is a market that is really saturated right now. Everyone has a smartphone, right? So the COO, Hu Baishan, told me exclusively that really the priority needs to be going abroad.
I think consumers' purchasing power only has impact on their phone replacement cycle. After China rolled out the subsidy scheme for smartphones in January this year, mobile phone sales during the Spring Festival indeed increased comparing to the same period last year. But after the Spring Festival, sales actually dropped. Why? The subsidies just simply moved up consumers' original plans for replacing mobile phones. It doesn't make fundamental change.
Given that you have risen now to the #1 position in China, ahead of Huawei, ahead of Apple for the full year 2024, what are your priorities to expand overseas? You've had some issues, I think, obviously in India. You've been beaten by your competitors in Thailand, Philippines, Vietnam. You've had some success in Indonesia, but you're not in the United States, Europe. What are your ambitions overseas?
First of all, the Chinese market has actually entered a typical stock market. The average replacement cycle of mobile phones in the Chinese market is about 4 years, which is about 280 million mobile phones sold each year. Although we are the #1, the difference among competitors are minor. Chinese market is still relatively competitive. For us, our future definitely lies in overseas markets.
What's your ambition for the U.S. market?
In fact, apart from the U.S. market, which we have not entered, we didn't enter other markets like Western Europe and Northern Europe, including countries like the UK, Sweden, and Norway. These markets have several common characteristics. First, a large proportion of users are Apple users. Second, they are mainly made up of higher-priced products, such as those priced at $800, $1,000, or above. Third, their telecom operators are dominated by large and powerful companies. At present, these countries are not a good match for us. So it's not that we're not entering the U.S. market. It's just that the time has not come yet. Maybe in 3 or 5 years, we may enter those markets with other innovative products, not solely relying on mobile phone products to meet the needs of high-end users.
How directly impacted are you now, and do you expect to be, by the export controls on advanced tech, in particular the chips? Do you have to advance buy, stockpile these chips? How do you get around the geopolitics, which is across many technology industries?
We don't feel the impacts. For real. The disputes between China and the United States don't seem to affect us that much because, for example, Qualcomm and MediaTek are not affected. Memory chip makers like Samsung and SK Hynix are not affected either. So we don't feel the impacts. Essentially, for us, we operate within the scope of legal and regulatory compliance. We don't violate the laws of any country.
And basically, he was saying there that they don't use NVIDIA chips in their current iteration of their top-of-the-line smartphone, the X200 Pro. It's MediaTek, and their next generation one, the Ultra, coming out next month, will be a Qualcomm Snapdragon chip in that phone. And also, watch out, guys. They are going to take on Apple's Vision Pro, the mixed reality goggles. They're coming out with their own version of that as well.
Steve, fantastic reporting there. We'll be going back to Steve there later on in the show, our chief North Asia correspondent. But I guess really one of the themes that Steve has been touching on there, the uncertainty around trade. We do have more certainty based on some sourcing. It's an unfortunate development that when you look at the certainty we're getting, that we are expecting now, based on people familiar with what's going on here, that Donald Trump may be looking to implement these copper import tariffs within weeks. The initial timeline we were working on was sometime before the end of this year. Analysts were expecting that to come through in terms of a 25% copper tariff by year end. It's earlier, certainly, based on the understanding we have right now, than the 270-day deadline that was initially the initial thinking. We'll get more on the story, of course, later on in the show. Let's pivot now from one market to another. Chinese markets in focus today, 3-4% drop, of course, on tech on Tuesday. Morgan Stanley, though, striking a fairly upbeat note here on Chinese stocks. They put out a new report. They put out new targets for these benchmarks. Let's bring in April Ma, our equities reporter, to take us through really these the new targets and the thinking here out of Laura Wang and the Morgan Stanley team. Yeah, April, what did you get us up to speed here?
Yeah, so I think the latest report is really very encouraging, especially as it comes as the Hong Kong Tech Index was just about to fall into correction territory. I think the wording that they used was very upbeat. What really stood out to me is saying that China really now deserves its valuation discount to Vantage compared to MSCI emerging markets. So that's really, really upbeat and bullish. And what it's citing is an earnings beat in the fourth quarter for MSCI China companies, and this comes after 3.5 years of misses. So really, that's what's been holding MS back over all these quarters. Even as the rally failed to really lose steam, it's still quite high up there. But MS was rather late to make these calls. So it scaled back its underweight call earlier in February, and now it's making another move just a little over a month later. So what's really propping up its confidence is earnings.
April, I mean, on the other side of the sort of other end of the spectrum here, we do also have China tech stocks on the brink of a correction. Just tell us what you're seeing, what's driving that.
I think a lot of that is trading driven. We have to understand that there's been a pretty good run up in this rally, and that amid earnings seasons, people are going to be scrutinizing any little of the imperfections for a reason to take profit. What is encouraging is that there was another research from Goldman today, which was saying that investors are increasingly upbeat, and the wording that they use is that China is back. So it's very decisive, very resounding call. And again, the reason is how AI has been such a game changer. So I think in the longer term, the tech story is here to stay, and that this time investors are arguing that it could be different.
April Ma, thank you so much for joining us. That's Bloomberg's equities reporter. And of course, we are counting down to the open of trade in Shanghai, Shenzhen, and here in Hong Kong. You're watching The China Show. Good morning. You're watching The China Show. We're live at the HSBC summit here this morning. Our colleague Jumana speaking with Mario Draghi, and we do have some lines crossing the desk now. Draghi's saying that he's concerned about consolidation in the defence industry, calling for a change in rules in the defence industry too when it comes to mergers as well, and seeing this potential risk in Germany reaffirming itself while others won't.
Yeah. Now, the U.S. is, let's talk about the geopolitical story now. So Russia and Ukraine have agreed to a ceasefire in the Black Sea. We're just getting some lines, in fact, right now that Donald Trump, Russia wants to see an end to the war right now. Let's get the details of all of this and the news that you might have missed overnight. Let's bring in Jill Teases here, our Bloomberg desk editor. Yeah, Jill, get us up to speed. And the lines coming through right now, put those into context of what we've heard so far.
Yes, that's right, David. Well, obviously, as we've known for several months now, the Trump administration is really pushing for more of a total ceasefire in this war in Ukraine. They're targeting, we've reported, as soon as April 20th for that. What we're looking at here is what the U.S. is describing as, at the very least, sort of a partial ceasefire in the Black Sea. A lot of this, though, is a bit tenuous at the moment. Some of this is kind of conditional, it seems, on some things that weren't necessarily mentioned in that U.S. statement. The Kremlin, for example, is saying that, some of this comes down to, they'll observe a ceasefire if it does include the lifting of sanctions on banks and as well as, some companies involved in agricultural exports. That's not, again, laid out in that U.S. statement. So I think still some questions that need to be answered there. In addition to that, what you're seeing on your screen is a few other details involved in this Black Sea truce, including that 30-day moratorium on attacking energy facilities. That's another big part of this. So, at least some progress there. In terms of reaching at least this partial ceasefire. But again, it does kind of feel that there's a lot more to go before we've got anything resembling an all-encompassing peace deal.
Jill, I just want to pick up on your point there that you made about some of these energy facilities, because some are becoming a key sticking point here when it comes to sort of some kind of agreement as well. Just talk us through that.
Yes, that's right, Rebecca. There's actually one nuclear facility in particular. This is one that was, prior to this war, Ukraine's largest nuclear facility that is currently under the control of the Kremlin. That is one thing that, both of these sides have said is kind of a major sticking point here. We've had Russia say that, they believe they still want to hold on they still have control of that particular facility. Ukraine, Zelensky has actually sort of brought this up to Trump as a sticking point. I think just really kind of emphasizing again that there are certain issues here that really have not been clarified. There was actually just, quite recently this week, an intelligence report from the U.S. intelligence community saying that actually both Ukraine and Russia do have some incentives to continue prolonging this war, at least in the short term here. So again, it does kind of feel that there's still a lot to go here. I'm not sure, how likely we're going to hit that April 20th deadline that the Trump administration is really kind of pushing on here, for sort of an end to this war. But again, I think just looking at, these various things, whether it's Russia's concerns about sanctions on some companies, whether it's some of these concerns about energy facilities, there's still, some daylight here that really does need to be resolved before we actually reach that full truce.
Okay, Jill, thank you so much for bringing us up to speed there. That's Jill Teases, Bloomberg News desk editor for us. And some of the other top global headlines that we are following this morning. President Trump has announced an investigation into how a journalist was added to a text group of top U.S. officials discussing plans for military strikes in Yemen. He's expressed support for his national security advisor, Michael Waltz, and suggested procedures might not change in the aftermath, with a criminal investigation unlikely. Waltz says he takes full responsibility.
We're going to get to the bottom of it. I just talked to Elon on the way here. We've got the best technical minds looking at how this happened. But I can tell you for 100%, I don't know this guy. I know him by his horrible reputation, and he really is the bottom scum of journalists. And I know him in the sense that he hates the president, but I don't text him. He wasn't on my phone, and we're going to figure out how this happens.
Japan has launched a joint headquarters for its self-defense forces, putting its military branches under a single operational command. The new command center reflects the country's efforts to make a more capable fighting force amid growing challenges from China and North Korea. Japan has also created a new division of its military modeled on the US Marine Corps. Bangladeshi leader Muhammad Yunus is beginning an official visit to China on Wednesday. Yunus is set for talks with President Xi Jinping and top Chinese business executives on trade, investment, agriculture and infrastructure. Yunus is also expected to discuss renewable energy, particularly a potential collaboration with solar panel maker LONGi.
Right, just to get you guys up to speed, here are some breaking lines, excuse me, coming through out of Donald Trump here in his report. So, as it pertains to these and the reciprocal tariffs that we are waiting for, it's March 26th, that it's April 2nd, so about a week from today, give or take, that there will not be too many exceptions on that. That's point number one on tariffs. On point number two, it's a separate story, but this, I think he's also commenting in the same report on these copper. Now, this is actually my mistake. Let me just rephrase that also. On the copper story, our reporting is actually effectively saying that Donald Trump might be looking to impose the 25% or the tariffs earlier than expected. So we're talking within weeks and not so much a 270-day period. And as I'm saying that, copper prices in the U.S. are now hitting a new record. They did hit a record. We're continuing to see that price on the way up as we speak. So we'll leave that there for now. We'll get you a preview, of course, of the markets ahead. We're called higher on the Hang Seng Index, 0.5%. Plenty more ahead. You're watching The China Show. Good morning.
Welcome back to The China Show. Here's a look at how the pre-market is shaping up. And it looks like Morgan Stanley's kind of sprinkled its magic, right? And that slump from a day ago looks to be reversed. And this is despite all these headlines when it comes to tariffs, or perhaps because of that. Flip the board, take a look at how some of these stocks we're watching are shaping up. Look at Tencent, news out that share buyback. That's the amount that we're looking at. Flip the board again, take a look at Baba, some of these cooperations in the way of AI, with Alibaba signing some pacts with China's Zhejiang. So looking like it's going to be a really positive day. You're watching The China Show. The Open is next. This is Bloomberg.
Good morning. You are watching The China Show live from the HSBC Global Investment Summit here, counting down to the open of markets. 30 seconds and change off here, Dave. And really this question over, do we see a sort of technical correction? At what levels? And how, I guess, how concerning is that anxiety? It's just a brief moment of sort of a slight recalibration, or is this something more fundamental? And of course, contradicting some of that more negative momentum, we've also seen this sort of positive notes coming out from the likes of Goldman Sachs, from Morgan Stanley, when it comes to Chinese equities.
Yeah, they're talking about the fundamental picture there. I think, post-earnings, I think, underscores the fundamental aspect of that note coming out of MS and Laura Wang. Post-earnings, here are your revised targets for these benchmarks right now. We're at the open, about 6 seconds in. Let's get a sense of how things are trading in the opening minutes, and whether or not, April, we will be getting the technical correction today. It doesn't look like it, but we'll see.
Doesn't look like it. I mean, it's a lot of green. We're looking at the board, and I think part of the conversation was how, these index targets are being raised, but as some of our reporters have also noted, overall it does look like that tech story is still quite intact. It's staying. It's not going away. For the moment, it's flat on the mainland, keeping an eye on copper prices. Of course, this Trump headline just dropping in the past hour about how, potentially we could see copper tariffs in the next couple of weeks, and that's really fueling not just the contracts, the commodity itself, but I think we're also seeing that firmness in some of these copper stocks. Jiangxi moving about 1.5% higher. Of course, when it comes to some of these contracts, there's been a disconnect in what we're seeing in US versus, say, London or China contracts. Flip the board again and take a look at what we're seeing in the Hang Seng. As I said, a lot of green, mostly across the board, even in property stocks, interestingly. And of course, the levels that we were kind of watching in terms of are we going to see correction? Were roughly 5,500. But as I say, as things stand, really doesn't look that way, guys.
Doesn't look like the way for now, and it looks like we are getting some buying across maybe the Stock Connect today. We'll get more details, of course, on that and what flows are looking like, in fact, across the Stock Connect. Now, the other part of the conversation April was touching on there, of course, is copper, and we are seeing copper go from strength to strength to strength. In fact, Stephen Engel, our Chief North Asia correspondent, is at the BOA Forum taking place in Hainan right now, and he's actually standing by. We're probably the perfect guest to talk us through the commodity story and the copper story as well, Steve.
Yeah, let's talk about commodities and strategic metals, obviously, with Andrew Forrest, Executive Chairman of Fortescue Metals. Thanks so much for joining us. As we always do, our annual get-together here at the BOA Forum on Hainan Island. So we'll talk about the copper issue in just a minute, but essentially, you had a chance to meet with Premier Li Qiang at the China Development Forum, where we were both there. It's a really strategic time for China to navigate what's happening abroad with the tariffs and also restore confidence in domestic consumption and the property sector and the local economy. What was your reading coming out of the China Development Forum and your meeting with Li Qiang about the end demand for steel, which there's an oversupply, and how that leads to property recovery eventually?
I think that China's message that it's going to stay the course, it's very serious about building its economy, about increasing the health, the welfare, the living standards of its people as quickly and as sustainably as it can, is probably a good message for all of us. We've got very deep fragmentation happening in the world. I think that's a very bad thing. I think the world should be a collaborative world, but you've got Europe carving itself off into Europe. You've got Canada wondering about its own existence. Attitudes are changing everywhere. This is not a great trend. Tariffs everywhere, not a great trend. It's a sugar hit, but after the sugar hit, Steve, what then?
Yeah, what then? Because we have more tariffs potentially coming. On the copper front, I know you're mostly iron ore, but we've talked in the past about moving into some copper assets, also lithium and rare earth to diversify away. The Chinese slump continues in iron ore in the property sector, obviously, because new home starts in January and February, the lowest in in 2 decades. So it's still a slump here. But in copper, would you be cautious right now going into copper, or would you want to go a little bit quicker because of the enthusiasm we're seeing, at least in the U.S. futures market right now?
Yeah, look, I'm not going to be taking bets because of tariffs. Any economist who's worth half his salt is going to tell you tariffs is what drove the Great Recession in the 1930s. It seems a really good idea politically for a very short time, and then you realise as your economy gets dragged down, as your own consumption falls away, as your demand for other nations' products falls away as a result, the global economy starts to stagnate. This is just what happened in the 1930s. Look, I'm not going to follow through on that and make a sugar hit decision. We've got small oceans of copper, let's suddenly commercialise them. When there's long-term demand trends, when copper is rare, when rare earths are rare, I can assure you there's nothing rare about rare earths. They're a processing challenge. I can show you tens of kilometres of strike lengths of our rare earths, but will we commercialise them? That depends on downstream processing.
So what would be your long-term copper strategy? I know Mr. Henry was at the China Development Forum. He talked about, BHP is going further into copper, not necessarily away from iron ore, but just adding that.
Yeah, no, I really like what BHP is doing. I think they need to. We will continue to build up that very large copper option, which Fortescue has within its own asset base. We see a world where it's going to wake up later in this decade that climate change is accelerating at an accelerating rate. It's here to stay. All the hot air coming out of governments, climate isn't listening. Climate doesn't care what you say. It doesn't read the papers. And we will be impacted more and more by climate change. And so I'm seeing, look, very short-term policies, trying to wish it away. It doesn't wish anything away. And when the world wakes up, you'll see a very serious move back into green. And that's wise. I mean, if you're here for humanity, if you're here for organic life, you're going to be listening to the climate.
What have you been seeing as far as trade flows in the ferrous markets, given all the talk about the steel tariffs that we've had out of the White House?
Look, things are consolidating. I don't see big drops in long-term demand shifts. I see still a huge demand coming out of China. I see the cry across the world for green steel. I see the cry across the world for green energy. You know, I have people saying, you know, I'm worried about consuming, I'm worried about flying, I'm worried about building my house because I don't want to contribute to the pollution problem. Well, that's because of incredibly clever and devious marketing of the fossil fuel sector, which is trying to say, hey, we're all responsible, which is code for no one's responsible, not me, the fossil fuel sector, who's of course responsible.
Well, you're saying big energy is getting it all wrong.
Yeah, look, and you're not giving consumers a choice. So I'm saying, hey, iron ore, hey, steel, hey, big energy, hey, big fossil fuel, all you big industrialists, you're the people at fault. I'm the person at fault. We have to change. We have to go green. We have to give consumers a choice. Don't tell me that people are going to destroy the planet with plastic out of choice. No, we're not giving them any choice. When every bit of consumer product is presented in plastic, you have to consume it. That's the industrialist's fault, not the consumer.
Well, what's going to be your long-term plan then for green hydrogen? Because you had to pull back from that last year and also the beginning part of the year.
I used to say that that's a crap politician statement.
Well, then explain it to me, because the first couple of months, what's your read from the Trump White House on renewables and how it relates to your investments in green hydrogen?
So we consolidated Fortescue Energy and Fortescue Metals into one. That led to layoffs, okay? About 700 people. At the same time, we acknowledged that the demand for green hydrogen had disappeared because of the very slick marketing I've spoken about by fossil fuel. You know, and there's bots, hundreds of millions of bots going to Midwest America, Midwest or Middle Europe and saying, you know, there's a war in Europe and there's a war in the Middle East. Now's not the time to change to something which is new and better altogether. You've got to stick with what you know. And that's worked. So, but you can't fool all the people all the time, only all the people some of the time. Okay, so that'll only work for a short while. Then the world's going to say, hey, is there a source of energy which we can transport and use? And yes, it's green hydrogen. So Fortescue has doubled down on green hydrogen. We're excited with its future. We are not stepping back. And any idiot politician who says otherwise just needs to talk to me on camera.
Now, I know you have a distinct interest in, obviously, what's happening in Ukraine, personally, as well as through your philanthropic Minderoo Foundation providing humanitarian aid. Are you encouraged by the winds of truce, Black Sea truce right now, and that the peace process is going forward, or are you very skeptical that U.S. and Russia can help broker a lasting peace?
Well, when one side's picked the fight entirely, I'm kind of skeptical. What I can say is this: we're not in love with any particular side or ideology. What we're totally in love with is peace and harmony in human nature. When we see borders get transgressed simply because one side is bigger and uglier than the other side, then we think that's wrong, and we think it leads to an unsafe world for our children and everyone's children. So we certainly, as the Minderoo Foundation, object to that. We want a fair world. And that's why we've pushed hard back against Russia. We've gone completely pro-Ukraine because the people of Ukraine deserve to make their own choices. And when some idiot politician says oh, you know, they all speak Russian, therefore they want to be Russian. No, that's because you put a gun to their parents' head and said, you'll make sure your kids speak Russian or else. Now, that's not a peaceful way. That's not a sustainable way. You need to give people freedom. Freedom to say no. And if you don't, then you shouldn't be in politics because you're not a leader. You're a dictator.
Andrew Forrest, I hate to leave it on that, but we're going to leave it right there on that mic drop.
Okay, thank you,
Thanks
sir.
so much. Appreciate it.
Cheers.
Let's get together before next year.
Okay, come on, we're going to do that,
All right,
mate.
thanks a lot.
Yeah.
All right, Rebecca, we're going to send it back to you. Always colorful conversation with Andrew Forrest, Fortescue Metals, and the Minderoo Foundation.
Thank you so much. Of course, Steve Engel, our correspondent and our man on the ground at the Boao Forum in Hainan for us. And in fact, just behind me, just noting that Mario Draghi has just finished up his talk, really talking about Europe and its role in global politics, its response to Trump. Anyway, you can follow along with all of our conversations that we're having here on TV. You can go to TV Go, send us live messages to our team and our guests during the shows as well. That's TV Go. Good morning to you. You are watching The China Show.
Good morning and welcome back. You're watching The China Show. An update here on CATL. We're looking at shares are down about 0.2%, onshore shares, because soon enough we might get a Hong Kong listing, and certainly we did get some developments along that line. A sign of here coming out of regulators. You're looking at the stock right now as we were talking about their massive battery maker. Let's bring in Felipe Pacheco, who's with us right now, to talk us through the story. And yeah, let's start there. Why is this approval such an important step as we head into that Hong Kong listing?
David, it's a very important step for this gigantic deal to actually move on. Now we're just waiting for similar approvals here in Hong Kong from the regulators and also from the exchange, but they could move fairly quickly. The most important one is the one that comes from Beijing, and that's what we know. It's granted to the company right now. It's a massive deal that Hong Kong is expecting. It's a secondary share sale, as you know, as you mentioned. The stock is already trading in Shenzhen. Is a gigantic name for the battery, a global EV battery industry, very important name within China's stock market. And if the company comes with a jumbo deal of around $5 billion, it would be the largest since the early times of the pandemic here in Hong Kong, and it would boost the numbers for the equity capital market here in Hong Kong to above the level that we've seen last year, just for you to have an idea of the dimension of this potential sale.
Felipe, tell us also about the dynamic and the backdrop for share sales in Hong Kong. There was some hope that, a potential deal of this size could actually provide a boost for demand and the market more generally.
Rebecca, that's a good point. I think that the company can move on quite quickly with this deal right now and take advantage actually of a window that we clearly see that's open over the past few weeks for these major deals here in Hong Kong. We had, for example, recently Xiaomi and also BYD, both very, very big Chinese names as well, coming to market with secondary share sales to raise up to $11 billion. Very strong demand, very big deals. Investors from different parts with different profiles actually jumping to get a little bit of those shares. The Hang Seng Index is actually one of the best performers globally so far in 2025. It's a very, very different scenario than what we saw at the same time last year or even during the second half of 2024. There is appetite, there is interest, there is recovery for the Hong Kong market. And of course, companies see this is very appropriate to go ahead and put their shares in the market. How long this is going to last, it's very hard to predict. But definitely this is a good moment for a big deal, big share sale like the one by CATL to actually come to life.
Felipe, let's continue that positive theme. And the optimist in me wants to ask you what the problems are, potential problems, looking at this listing.
David, I think that it's very important to actually highlight what the potential problems are, because this is, again, it's somehow part of the China story. There are geopolitical concerns that come with this listing. The company earlier this year was actually added to a list by the U.S. Defense Department, saying that mostly alleging that the company could have links to the Chinese military. It's not sanctioned, it's not a direct sanction, but some investors, especially those that are very big in the U.S. or that have very big links with clients in the U.S., they could potentially stay away from this jumbo share sale. If that's going to be the case, it's very hard to tell if the geopolitical background is going to change to worse over the next few weeks. It's also impossible to tell. But this is definitely something that's on the radar of everyone's mind when they actually look at the stock and the potential share sale that will move on here in Hong Kong by CATL.
Yeah, Felipe, I feel like we're very likely to speak to you in the not too distant future. That's, of course, Bloomberg's Felipe Pacheco there with the very latest on CATL. Let's go back now to Avril Hong in the studio for us, where she is keeping an eye on one of the big movers we are watching on the show this morning.
Yeah, we're talking about Nong Fu Springs. It's reported the slowest annual profit growth since its 2020 listing, and you're just looking at these declines of about 11%. Just checking on the size and scope of these declines, I think it's by the most since October last year to the lowest level since at least January, and all this on its profit miss amid negative publicity about some of its water products. Certainly not quite welcome news for China's richest man, Choong. So that's the decline you're seeing in the share price of Nong Fu Spring, 11% down. Plenty more ahead. This is Bloomberg.
Every Australian taxpayer will get a tax cut next year and the year after to top up the tax cuts which began in July. Yeah. This will take the first tax rate down to its lowest level in more than half a century.
That's Australian Treasurer Jim Chalmers there in his budget address to Parliament. Now, the surprise cuts to income tax rates are a clear pitch to Australian voters ahead of an election that could be called in a matter of days and must happen by the end of May. Finance Minister Katie Gallagher told us the government wants to add to cost of living relief without stoking inflation.
Well, the budget's always a series of balancing decisions and balancing, requests for investment and other ways of dealing with all the pressures on it. But we see these as a good way to provide a bit of relief to households. They're a top-up to the tax cuts that were passed and started flowing in July last year. And really, when they're put together, together with those tax cuts and once fully implemented, it'd be about, for the average worker, about $50 a week. So we're not pretending that they aren't modest, that's for sure, but they're topping up the work that we'd already started a year ago.
Well, that's true. I mean, the Treasurer, Jim Chalmers, also used the word modest when he was describing them. And when you consider the size and the timing of them, was there some consideration given to the inflation risk as well?
Well, that goes to the timing decision to have them start next year, really to make sure that inflation is back into band and that, we are mindful. Obviously, we've done a lot. Australia as a country has done a lot of heavy lifting to get inflation back down to more normal range, and we don't want to jeopardise that. And so the timing of when they come in was factored into our thinking and into the Treasury forecasts.
And when it comes to forecasts around inflation, that's forecasted to be back inside the RBA's target range, making it pretty hard here to mount an argument against further easing, right?
Well, we obviously leave the bank to make their decisions. Our responsibilities are contained in the budget, but we are really pleased the Treasury forecasts have inflation turning sustainably or coming back sustainably into the band 6 months earlier than had been expected at MyEFO, and so that's really welcome news. Obviously, we'll leave the bank to make decisions based on the information they have.
Turning to some questions around spending as well, we were expecting to see perhaps a substantial boost to defence spending considering, well, the geopolitical environment at the moment, potential pressure from the US as well. Was there a temptation to go a little bit bigger there because we're rising to 2.3% of GDP by the early 2030s?
Look, we put a lot of work into working out the priorities in defence, and the Defence Minister has led that in conjunction with his department. We've found an extra $50 billion over the medium term for defence. That's not an insignificant amount of money when you think about it. We've brought forward some money in this budget based on a defence advice about their capability needs, so that is met. But I also think you should look at defence and national security, bringing in all of the intelligence agency, the work that DFAT's doing to stabilise our relationships in the region. It is very uncertain global times, as everybody is witnessing, and so investments in defence are essential, but so are investments in a whole range of other areas to make sure we keep Australians safe.
Yeah, there we go. That was Katie Gallagher there, the finance minister, with our Paul Allen in Canberra. Yeah, we'll have lots more on the way here on the China Show. Second hour is coming up. Some really good conversations ahead here at the HSBC Global Investment Summit.
To the China Show. Here's a look at the Hang Seng Index a half hour into the session, and it looks like yesterday might have been just a sort of blip, even though we were on watch for correction. Those declines of almost 4%. Look at the rebound, although it is quite a number of hours to go before the close of trade, so we'll see how this plays out. But if you look at the tariff narrative also, I think there's a bit of that. We'll see it, we'll find out when we find out. You flip the board, take a look at how that seems to be digested by some of these copper-related stocks, as well as the contracts. I mean, Trump's been talking about how they may implement copper import tariffs within weeks, so adding to the sense that we could see perhaps more restraint when it comes to copper supplies. So these contracts on the move higher, including stocks, you're looking at Jiangxi Copper, about 3% being added. Now, this is also on a day where we're seeing on the indices, if you flip the board, I'll just talk you through it, Morgan Stanley, Goldman, all sounding quite bullish when it comes to Chinese stocks, right? And a lot of this has got to do with the earnings narrative. They're talking about the beat so far, but if you look at some of the corporate developments we've been getting, Nongfu Spring, a profit miss, China Merchant, non-performing loans higher than expected, Kuaishou, you're looking at sales growth slowing, and then revenue falling as well for WuXi Bio. So, I think there's still a bit of consideration as far as these earnings narratives. They're still reflecting perhaps a bit of fragility in the recovery in China. Take a look at what we're seeing elsewhere. In the region today, we did see that positive handover from Wall Street, though not by much. Today, it looks like they're building on some of the gains from a day ago. You're looking at the U.S. 10-year yield at the 4.33 handle, thereabouts, and of course, digesting the U.S. consumer confidence that tumbled to the lowest level since early 2021. And I think it's that tariff consideration, I think, just trickling through into not just consumer confidence or lack thereof, but what the economic outlook, not just for the US, but globally, is going to look like. And I think we also have some breaking news out of Sri Lanka, where it has the key rate at 8%, leaving that unchanged. And of course, for a lot of these central banks in the region, they're kind of hamstrung given the uncertainty about how many cuts we are going to see ultimately from the Federal Reserve this year. I mean, we've gone from 3 to 2.5, maybe 1 if you're hearing from the likes of Raphael Bostic just earlier in the week. And of course, in the next hour, we'll be speaking exclusively with the Sri Lankan Central Bank Governor Nandalal Weerasinghe about the latest rate decision and their inflation forecasts for the year. That's it from me for now. How are things going at HSBC, David?
How are things here? Quiet a little bit. Yeah, it's died down a little bit, the volume.
Ish.
I think, yeah, ish. The next session is ongoing right now. In fact, I'm just looking at the screen right now. It's Michael Roberts, who we had earlier on, so we'll play that interview out. Because he really talked about the uncertainty around their corporate clients as they look ahead through this. Deal making, for example, has dried up, that sort of thing. Apart from that, the coffee's okay. The temperature's a bit cold, actually, but we have the lights, which offsets that as well. Enough about what's going on here. The temperature across the global economy, if you think about it, has been cooling down. The uncertainty has been on the way up. In fact, let's get it over now to Stephen Engel at the BOA Forum taking place there in Hainan for just a sense really on the China angle to all of this, Steve.
Yeah, I think they're trying to navigate these choppy waters as well as everybody, of course, because China's had 20% tariffs added because of the fentanyl issue. So that was a topic that I talked about with Henry Wong from the Center of China and Globalization earlier today, essentially because we heard from Steve Daines earlier this week in Beijing that the Trump administration is essentially saying they cannot have any further negotiations on mitigating future tariffs until the fentanyl issue is addressed and resolved by the Chinese. However, fentanyl is not being talked about at any of these conferences, maybe on the sidelines and in private, but not publicly, not at China Development Forum, not at BOAO. It could possibly be raised, I doubt it though, at the meeting Friday, which we're all going to be focusing our attention on, where Xi Jinping will be meeting with a number of so far unnamed top officials, executives, I should say, from multinational companies, including American companies. We're still trying to get that invite list. But as we go through BOAO this week, we are going to be really focusing Friday on that. But tariffs are being discussed, and tariffs are front and center of the concern of Chinese as they try to have their own risk mitigation by boosting domestic demand, boosting efficiencies on the industrial side, and leveraging off the gains they've had in AI. So on tariffs, here is Henry Wang, as well as my most recent guest we just had on Bloomberg Television, Fortescue Metals, Andrew Forrest.
The bilateral trade has not decreased since the trade war, has almost come up 20%. Yet China's dependency on U.S. trade used to be 20% of the total trade volume. Now it's only almost 10% now. So around 10% now. So you can see that trade tariff is not really effective on China. China has already adapted to that. China has been going global. China has been really, finding all kind of way to stimulate domestic consumptions. And China's trade more with BRICS countries, South, global South countries not.
I mean, any economist who's worth half his salt is going to tell you tariffs is what drove the Great Recession in the 1930s. I mean, it seems a really good idea politically for a very short time, and then you realise as your economy gets dragged down, as your own consumption falls away, as your demand for other nations' products falls away as a result, the global economy starts to stagnate. This is just what happened in the 1930s.
And the one question on many people's lips so far here at BOAO since we came here a couple of days ago is, will there be a summit between Xi and Trump? Probably, but the big question is when. Steve Daines, of course, that Montana senator who came to the China Development Forum as Trump's unofficial envoy to China for that meeting, essentially said it will likely happen within this year. Well, there's still 9 months left in the year. That's a long time for these issues to still be resolved. Most agree that these two leaders need to get together and sort of establish the policies down each other's bureaucracies to get some common ground on some very fractious issues.
Steve, thank you so much. Excellent to have you on the ground there joining us from Hainan. That's Bloomberg Chief North Asia Correspondent Stephen Engel for us. And now let's bring in Kelly Anshaw, partner at Hogan Lovells. She's a former trade negotiator, of course, under Trump's first administration. We do have some breaking news lines coming through. President Trump saying all we're going to do is reciprocal, saying that he'll probably be more inclined to being lenient rather than reciprocal. Just wondering, does this move the needle? Does this sort of change our expectations of what we're likely to see on April 2nd?
Well, thank you so much for having me. It's great to be here in Hong Kong with both of you. I think that we will find out the final results of the April 2nd tariffs on April 2nd. What we have seen are a lot of directional signals from the president about where he wants to go. On Monday, U.S. time, he did a press conference where he said, I'm not going to treat them as bad, quite as bad as they're treating us, but they're still going to be substantial. So I think that this news is consistent with that messaging, that directionally they're reciprocal, but they may not be one for one in terms of like the specific tariff rates that other partners charge us.
Are you surprised by, I think, two-part question, to what extent, to the extent at which the U.S. and China part of the conversation hasn't really come to the center, if you will, of attention, but right now it's really North America. And I'm wondering, is that deliberate? Do we simply have to wait for the China part to come up? Like, what's your sense of the order, the sequence of things?
Yeah, it is interesting, given how prominent the U.S.-China trade talks were during Trump's first administration, how little we've heard about that, particularly on the U.S. side, where we hear a lot more about Canada and Mexico and fentanyl tariffs and USMCA renegotiations. But I think what's happening here is you can't boil the ocean. You can't fight a global trade war all at the same time. You've got to focus. And on the calendar in the U.S. is that USMCA renegotiation that I think the administration is looking to tackle first before they turn their attention to other trading partners. And the other thing that's missing, at least on the U.S. side from U.S.-China, are the reports that are due to the president on April 1st, specific to China's compliance with Phase 1, the review of the $18 billion in tariffs that the Biden administration announced, and then also China's IP practices. And that, coupled with the fentanyl tariffs, where we now have a 20% tariff and possible Venezuela tariffs that will likely be targeted at China, will tee up a conversation between the two leaders as to how they want to navigate this relationship. But I do see that as playing out a little bit further in time.
Okay. I mean, and to Dave's point about the sort of focus moving away from just US-China when it comes to trade, I mean, we're sitting here in Asia, we're expecting reciprocal tariffs, and potentially, you know, arguably this is the region where we're most globally interlinked when it comes to trade. What are you expecting, you know, the consequence of reciprocal tariffs to be in this part of the world, in Asia, and how concerned are people? I mean, are people kind of asking you about that during, you know, your last sort of 24 hours here?
Yeah, I mean, there's a lot of concern about what these reciprocal tariffs will look like, which is why I say, you know, we're sort of burying the lead until April 2nd. But certainly countries like South Korea, Japan, Vietnam, Thailand, Malaysia are going to be on the administration's list because we have the largest trade deficits with some of those economies. But the other thing that it means is I think there's a total lack of faith in the current global trading system and the World Trade Organization in particular, and this concept of MFN that dominated so much of the last century in the way that we traded. Instead, if we're negotiating with countries bilaterally, one for one, country for country, the global trading system is going to look a lot different at the end of the 4 years than it does right now. So I think that, you know, the jury is out in terms of how this goes, but the administration is going to want to trade and fix some of these relationships with a lot of Asian trading partners.
In terms of that fixing, so you've spoken about there being two types of tariffs. On the one hand, this rebalancing which it sounds like a lot of the Asian countries fit into that bucket. And on the other hand, tariffs that are aimed at kind of negotiating a better national security deal. But if the Asian nations are in that former bucket, are we talking about a more permanent reordering of world trade here? And does this have the potential to upend, you know, the pattern of business that Asia has seen for the last few decades?
Yeah, I think that the proposition the president is laying out for trading partners is I'll go down if you go down. Meaning the relationship is asymmetrical. We need to raise U.S. tariff rates up to meet the level of our trading partners, but he's willing to make those concessions on a reciprocal basis, which puts the ball in the court of the other trading partner. Now, for business who's trying to navigate this is incredibly frustrating. Yeah. And it's part of the reason we won't know what these reciprocal tariffs are until April 2nd, because you've got India, you've got the EU in Washington this week trying to negotiate their own deal, and there may be other governments that are able to successfully do that between now and April 2nd. But I do think this will land in a more stable place. I think it's going to be pretty rocky, though, for the next few months before then.
Yeah, and to your point on the frustration among corporates, right? And, you know, I'll maybe phrase this very, very simply. For those corporates that are sitting on the fence, thinking about or considering to make that CapEx production capacity investment in the U.S., not wanting to pull the trigger, hoping that this is temporary. Yeah. What's the advice for those companies?
Yeah. I think they have to wait and see, right? I mean, that is exactly the advice I'm giving my clients, and that the next few months are difficult to predict. I have a better sense of where we are 6 months, 2 years, 4 years from now with a lot of these trading partners, but the emotional arc and the negotiating arc of how we get there is going to be very rocky. And that's part of the president's strategy as well. Yeah. It's ambiguity by intentional design. It's to try to provoke a reaction from the other trading partner. But again, for the folks who are attending this conference and for many of the businesses I'm advising, that's a difficult place to be.
What's the most common question that you're getting from clients and attendees here based in Asia? And I just tag on, what is the biggest misunderstanding that you think people in this part of the world may have about President Trump and the tariffs?
Yeah, I do think what's interesting is I haven't actually gotten that many questions from a Chinese audience on tariffs, right? They're more interested in some of the national security measures and national security tools that an administration may be taking, whereas back in Trump 1.0, it was a lot about the tariffs. So that is an interesting dynamic. I think also it's this uncertainty, right? Like, where is this going to land? Where is this going? That's the number one question that I'm getting as folks are trying to plot out their own investment decisions 3 months, 6 months from now.
Do you think we'll get a meeting between the two leaders? Like, is one likely going to happen sooner than later, just because of just the flow of events taking place?
I certainly think at some point that will happen. There seems to be some flirtation on both sides about the timing and when that might be. Right. But some of this will be driven by the substance as well, right? If the relationship starts to go in a bad direction, it's going to be much harder to bring leaders together, right? You don't want to have a substantive shouting match or policy disagreements when world leaders are meeting. On the other hand, sometimes that head-to-state, leader-to-leader meeting is an opportunity to resolve some of those concerns. Now, we have things like the G20 coming up this year. We have some of these international forums, which might be just a natural place for leaders to have a bilateral session and meet. But I do think it will happen at some point. The economies are just too important to each other, and they're too important in terms of the global trading system to not be discussing things.
And just a final question for you, because you've dealt with the president, of course, in the past. My question is, how is he as a person? And the reason I ask you that, just the context, is do you think he is pragmatic enough to pull back from some of these things? Because it's also created domestically a level of uncertainty among consumers that have held back on spending. And if the economic pain merits maybe a lighter stance, do you think that this White House might just be able to pull that off?
Yeah, you know what's been interesting is that during the campaign and in the run-up to inauguration, the messaging coming out of the president, many of his surrogates, were that tariffs were great. They were great for collecting revenue. They weren't going to lead to increased prices. But what you've heard instead over the last couple of weeks is a concerted effort to actually communicate to the American people on a number of levels that there is going to be a transition period, a period of pain, and that's what it's going to take us from here to there. Yep. And what's also different about Trump 2.0 versus Trump 1.0 is that it's a second term, and there's not a re-election at the end of the day. So I think he's got a clear vision of where he wants to go, and he's now being very clear that that's going to come potentially with some pain in the meantime.
It's really good to have some insight directly from you. Thank you so much for taking the time to spend time with us.
Thank you for having me.
Have a great rest of your conference. Hogan Lovells, a partner and former U.S. trade negotiator Kellyanne Shaw there. And yeah, on that note, well, it's getting a bit Loud in here. Avril, why don't you take it? You have some breaking news right now.
Yeah, we do. I mean, you were just talking to your guests about some of the national security concerns, perhaps a big risk factor when it comes to what investors on the mainland are watching. And, you know, in that tangential regard, you're looking at CK Hutchison, according to sources speaking to Bloomberg, potentially going ahead with its deal with BlackRock to sell to Panama port, so proceeding as scheduled. That's the reaction you're seeing there in the share price. Plenty more ahead. This is Bloomberg.
Welcome back to the China Show. We are live from the HSBC Global Investment Summit in Hong Kong. There's a lot of activity going on beyond us, so hopefully you can still hear us on the other side. Joining us now is the bank's co-CEO of Asia and Middle East, Surendra, Rosha. Excellent to have you. I mean, let's start perhaps with the Middle East. You're doubling down on expansions there. Do you still see potential room to add headcount? Where are the real opportunities?
Look, I think the real opportunities in the Middle East are in the underlying activity that's happening. It's wealth creation that's going on. It's the development of industries outside of the traditional ones. It's the innovation economy that's developing there, and the trade linkages between Asia and the Middle East that are growing, the flow of capital that's growing. So all of those areas are where we would look to add headcount as our business grows.
Right. And is there any particular business that has, like, I mean, we're almost 3 months into the calendar year, and I'm wondering, have you had any pleasant surprises?
Well, I think the flow between Asia and the Middle East continues to positively surprise us.
Okay.
Yeah, we've looked at the consistent growth that's happening. We're projecting a near doubling by 2035 of both intra-regional trade between the two regions.
Right.
As well as investment flows going from about 16 billion last year to 35 billion by 2035. And that trend is continuing strongly.
Right.
The wealth creation that's happening there, the growth in the UAE and the kingdom, very strong. Yeah. So that is something that continues to surprise us on the upside, and it's positive.
I was actually going to ask you as well, it's good you brought that up, that, you know, the trade, let's call them the trade flows, remain robust. Yeah, I was speaking with Michael Roberts,
yes,
of course, who oversees the institutional wholesale banking. So what they've noticed as far as trade goes, for example, is that there has been a front-loading of exports ahead of these tariffs taking place. And are you seeing any sign of weakness, though, in the recent data that you see from your perch?
Not at the moment, but there will be some normalization happen.
Okay.
And you've got to break it down. It can't be seen as one size fits all.
Correct.
There'll be specific sectors that will see that happen earlier than others. But at the same time, where we think there's going to be significant growth is services. Services trade, which is, you know, what India does very well, for example, or what's happening out of the Philippines, is growing at a very strong clip, and will continue to do that as digital services come to the fore and technology helps grow that as well.
And to your point, it's not just sort of the tariff question and the geopolitical question, but also the Middle East. I mean, you have quite a number of your competitors and banks wanting to move into that space.
Yes.
So I just wonder, how do you go about kind of protecting your turf here, particularly at a moment when you're thinking about expansion?
Well, it's about our clients and it's about our people, right? So we've been there for 130 years in the Middle East, operating through many, many cycles. So we have the confidence in ourselves in dealing with that, but we've got to stay close to our customers and do what they want to do, right? So as they move to global trends, as they move to regional trends, as they move to country strategies, we want to be focused on how we can help them. And then secondly, making sure we have the right people. So our talent in the Middle East is something that we are very, very focused on, ensuring we continue to retain the right people and grow our talent, right? We continue to bring in people as we grow, whether it's at the grad level or at the middle level or whatever it is, but those are the two things, clients and people.
Just following up on that point, you know, we've heard from sovereign wealth funds and domestic players there that they want to be working with partners that are investing in the domestic economy. So how are you kind of proving that out? And internally, what is the messaging that is a priority for you?
Oh, look, we've said it multiple times. These are priority markets for us, whether it is the Saudi operations we have, whether it's our operations in the UAE. We continue to invest in them. We have an associate bank where we hold 31% in Saudi. That's a significant part of our network that we leverage into the kingdom. We've got a significant presence onshore in the UAE as well as in DIFC. These are very core parts of our network. And what we bring to our global customers is our network. So it's absolutely, as more interest grows in the Middle East, that's where HSBC plays a role.
Right, and to your point, right, let's call it the change in the bank recently, has pivoted to the core areas of the Middle East and Asia. You're meeting with your corporate clients here, and I'm wondering, have they brought up any concerns about, say, the pulling out of investment banking in other markets, and how are you managing those concerns?
Look, I think there inevitably with change there are concerns, and some of the concerns is to just reassure our clients that we remain extremely focused on them. Right. We continue to cover them as intensely as we did in the past, and we continue to meet their requirements, but we are very clear with them on what we do and what we don't do, what we are good at and what we are not good at, because their time is to really end up wasting it. But yes, those conversations have been happening for the last few months, and I think by and large the attendance you're seeing here and the energy you're seeing here is a reflection of the trust the clients have in what
Absolutely.
we are doing.
What's the most common question that you're getting from clients this time around?
Look, I think the most common question I certainly get is how is trade responding to what's happening? How do we see the reshaping happening? And my message back is really, the change in trade patterns and supply chains has been going on for a while, right? It's been happening even before COVID. It accelerated through COVID. And it's happening and it's a variety of reasons. There's cost, there's geopolitics, there's resilience. But essentially, it's really looking at this sector by sector, geography by geography. You can't be generic about this. And that's where our capability, our level of detail, our presence on the ground can really help our customers.
Final question for you. Hong Kong has done a lot to build bridges with the Middle East. And I'm curious from your perspective on wealth flows. What are you seeing? Are you seeing more business coming to Hong Kong from the Middle East, or the other way around?
Both ways.
I guess it doesn't matter for you because it's still it's one of the other books, right?
Yes, yes. Look, and some of our deepest relationships are in Hong Kong, right? But when I travel to the Middle East, I've been really positively surprised by how deep our relationships are in the UAE and the Kingdom. So yes, both ways. Wealth flows not just at an individual level, but at an institutional level as well. There is look through to where do I invest, how do I diversify the money that I want to put to work, and the opportunity in Hong Kong as a platform into mainland China, and the opportunity in Hong Kong as a platform out of mainland China for investment both ways, in and out of the Middle East works very well.
Rosha, thank you so much for the time. I was just about to say you cover the region as well, including Hong Kong. So the next time you find yourself in town, give us a shout.
Please do.
Thank you for having me.
Pleasure to have you, Rosha.
There we go. Surendra Rosha, the co-CEO of Asia and the Middle East at HSBC. Right, we have plenty more ahead here on the shows, more exclusive conversations coming through here at the Global Investment Summit with the names you see on your screens at those times. Stay tuned for that. You're watching The China Show. Good morning.
Good morning, you're watching The China Show. Now, big story for us this morning. Senior foreign officials and major tech companies are pushing the Trump administration to rethink the country's global semiconductor strategy as the US prepares for a controversial framework for controlling AI development around the world. Let's bring in our China correspondent, Min Min Lo. Min Min, let's begin first here. Where are we seeing the strongest response coming from?
Yes, the strongest responses are coming from the big companies like Oracle, Nvidia, the companies that would see their top line impacted by this policy. We're talking about this AI diffusion rule that will separate the world into 3 different tiers. Most of the world will fall into the middle tier, where they would have a cap on the level of computing power that could be exported from the US to these countries. So Nvidia and Oracle are calling for the entire framework to be removed, for the regulatory process to be restarted from scratch, because because NVIDIA's argument is that this would push the world to adopt alternative technology with not much benefit to U.S. national security. Oracle in particular is worried about this provision that limits U.S. companies the percentage of their computing power that could be placed in any single country to 7%. And because Oracle is planning to invest about $6.5 billion in data centers in Malaysia, that would likely go above that limit. You have companies like Google as well arguing that this policy put a disproportionate level of burden on U.S. companies. There are also countries like Israel, Poland, arguing that this would limit their countries, not just their countries' access to these chips, but also make their countries less attractive to investors given the regulatory burden there. So many countries, including India, Malaysia, with very big chips ambitions. Singapore has their own AI chip plans as well. All these countries will be watching this policy very closely. It was first unveiled by Biden administration officials at their last week in office. Remains to be seen if Trump officials will keep this policy in its entirety or make some changes to it.
I mean, thus far, arguably, we've seen the U.S. policy when it comes to chip really accelerate the need for Chinese industry to innovate in this area. What are we expecting the impact to be for China's AI development from this very latest?
I mean, we've already seen so many headlines over the past weeks of Chinese companies launching their own large language models. There are hundreds of these large language models, and China is really becoming quite commoditized there. And the latest breakthrough was from Ant, which claims that they are able to train these models at 20% less cost using Chinese chips. So the rules of the games had changed for China, and they're adapting to it. Instead of moving to use the most advanced, the latest chips, they are trying to lower the cost, make the computational process more efficient. Obviously, the U.S. is still going to have a distinct advantage given they have access to the most advanced chips. But it's also all these other countries around the world, right? Especially countries that cater to Chinese clients. Many of these Chinese companies had been looking to rent AI servers overseas. So these countries will be keeping a close watch on how the U.S. policy framework will evolve, because the deadline is May 15. That's when that AI diffusion rule is supposed to kick in.
Min, thank you so much. Min Lo, our China correspondent there in our studios here in Hong Kong. Of course, just a reminder to our viewers, we're coming to you live from the HSBC Global Investment Summit here also in Hong Kong. Let's bring in our next guest here on set with us, Hendrik, founder, CEO at Global Investment Manager 91. It's nice to see you again. I think 12 months ago was the same exact conference.
Exactly. Good morning. And it's a wonderful event, David, so great to be here.
Annual tradition. Let's start there. Were you inside during the talk for Mario Draghi?
Yes.
How did he sound? What was his tone? Anything stand out to you?
I'd just like to remind everyone that Mario Draghi has published a brilliant report a few months ago, and it took Donald Trump to get Europeans to think about actioning it. Or it took a forced settlement which hasn't yet settled in Ukraine. And I wonder why European policymakers didn't read it up front and action it. So my question is the same as Draghi's question. He was very honest. How fast will the action be to raise productivity in Europe? Because Europe can do it and can become a very important third bloc in this multipolar world. And the answer is clearly written by Dr. Draghi and 3 other Nobel Prize winners.
I mean, another point that Draghi also made is this idea that it's not in Europe's interest to build the so-called tariff wall. But the tariff wall is precisely what the US might be facing when it comes to Asia, particularly because of the trade imbalances that we've seen. And in Asia in particular, we have a really interlinked global network. So I'm wondering how you read the potential impact of reciprocal tariffs and, maybe the secondary effect tariffs that we're expecting to see in this part of the world.
Firstly, I'm an open trade person. I was educated in economics at a time when people believed in free trade. And if we look around ourselves in Hong Kong, and we had Eileen Bashevsky here today, and if you look at China, where I was last week, and the benefits it had from participating in global trade, it's very clear that open trade is better. So I think we learn that at great expense to the world economy. But I don't think the United States will not necessarily either suffer or, it'll suffer, its consumers will suffer, but it is not a major exporter. It's Asia that exports. And so we are going to see trade corridors changing, supply chains changing, and as investors and as stewards of capital, we've got to understand those, because there are going to be big winners, big losers, but I don't think it's a simple calculation. It's too early to say. We don't even know what April 2nd is all about.
Right, and it's barely a week away.
Exactly.
I want to pick up on Europe, then I think we can talk about your China trip in a moment, because that's a very good point you brought up, that, for the longest time, global investors looked at Europe largely as a value trap. That's given us something to think about now. How do we need to be thinking about a European exposure longer term? Does this rally have legs to go? How do I need to be thinking about Europe?
I think it does have legs for two reasons. One is a marginal improvement in European governance. In other words, moving away from regulation to stimulation and encouraging growth, and especially technology off higher defense expenditure. Because we should be very clear. The reason why the US has Silicon Valley is not just because they're great entrepreneurs. It was driven ultimately by the government and defense research budgets originally.
Yeah.
We should understand that. So I think Europe will be better off. But more importantly, capital, and most of the world's mobilized capital is in North America. Capital has suddenly woken up and realized one-way bets don't work. Okay, and therefore the old argument for diversification around the world, spreading your money over more opportunities, will itself create an influx of equity capital or risk capital into Europe, and that will add a further marginal benefits. Then it's up to Europe to take the ball and run with it. And I know Asia will run with it.
Right.
I want to pick up on Dave's question there about your trip to China. I mean, key takeaways from your trip, where you went, but also, how it compares to your last visit. Is the mood on the ground shifting there?
Interestingly, the mood in Hong Kong is a lot better than a year ago. And that I found very interesting, partly because of, I think, wise stewardship from the Chinese side. Xi Bin made an excellent presentation here yesterday, the minister responsible for the SAR region. But also, Chinese economy now having the hope of tech driving further momentum, and that is spilling over, and that wealth is spilling over in Hong Kong. So we're seeing a much different, it's not, the problems aren't solved by any means, but I was here just after COVID, when Hong Kong opened, or when Hong Kong first opened, and then last year, and now, and there's definitely an improved momentum and improved bullishness amongst business peers and investment peers. Whether that will translate into sustained growth, we'll have to see, but we're hopeful.
I'm glad you brought up the timeline. So 2022, coming out of COVID, there was a lot of optimism, and we've had, from a market's perspective, we've had false starts. Right now, the rally it feels different. There are still people out there who are still deciding, is this a tactical opportunity that I missed, or is this a structural reallocation that is longer term? In which camp are you right now, as it pertains to Chinese equity markets?
I mean, we at 91 have been very bullish on the basis not only of value, but sustained value, i.e. not just once-off value, sustained value in some of the leading Chinese companies, and they were trading at prices which really made it worth taking the risk. So, and obviously we don't invest through ideological lenses, but what I can say is North American capital at the moment is split. A big part is saying ex-China, I don't want to invest and have potential trouble back home from my constituency. And then others are saying we take a long view on the globe and on emerging markets. And I think Martin Wolf, a Financial Times correspondent, last night at the dinner made a really important point. He said, we're all so obsessed about what the US is doing. Can the 96% of people on Earth not just get on with it? And I think the 96% is starting to get on with it. And that will have consequences and will change balances and will change perceptions. So, we believe there is a good future in what we all call emerging markets. We should probably stop talking about it. We should talk about markets outside the US.
But we are now.
Yeah, say less, do more. Let's all get on with it. Hendrik, excellent to have you. Thank you so much for joining us. That's Hendrik Dutoit, founder and CEO at 91, of course. And we have plenty more from the HSBC Global Investment Summit coming up on Insight. We'll be speaking also with former UK Chancellor George Osborne, Apollo Global Management President Jim Zelter. You're watching The China Show. You have been watching The China Show. This is Bloomberg.
Welcome back. You're watching The China Show. We have some interesting developments on this massive deal that we've been talking about for weeks right now. So it's CK Hutch, it's Panama business, and the plan right now to sell those two ports to a BlackRock-led group here, now said to be moving ahead as scheduled. This development, of course, comes despite China investigating the deal for potential national security and antitrust violations. We're bringing Manuel Baigori, who leads our Asia-Pacific deals coverage, for exactly what we know about this. And it looks like it's going through. They're pushing through with this.
Exactly, David. I mean, it's still early stages, still plugging away. But yes, after all the noise that we saw coming from Beijing, potentially taking a scrutiny into the transaction, I mean, our sources are telling us that the deal is progressing, is moving ahead, and they are focused on getting things done, and the work around due diligence, including tax, accounting, and deal structure, is making progress. They've got this April 2nd deadline for the Panama Canal ports, as well as part of the broader deals, which involves more than 40 ports globally. But yes, it was relevant to hear from sources that the deal is progressing and that work is still being done. Remains to be seen whether there are twists and turns in the horizon. It's obviously a very large deal, very complex, and obviously there is the political angle to it. So we are poised to see more opinions and more, turns into this transaction over the coming weeks. But for now, yes, the consortium is doing work and focused on trying to get things done.
Manuel, how surprising is it to the market, investors, bankers and so on, that a deal like this, which has become so controversial, obviously particularly in the eyes of Beijing, is still going ahead, also as far as we know? And I wonder, are you seeing sort of broader implications here for deal making that has this very clear sort of geopolitical bent to it? How is this expected to sort of shift the mood?
Yeah, that's a great point, Rebecca. I mean, the reality is it's a very interesting transaction because it touches on so many different variables, right? Obviously, it's a big deal, it's global, involves some really well-known names from Hutch to BlackRock to the industry players in the port space. So it has a lot of good ingredients for a great story, and obviously you've got Washington and Beijing and the geopolitical tensions attached to it. I mean, it's surprising and it's not so surprising, and let me explain why. I mean, it's a large transaction, and as such they are complex by nature, but obviously it touches on very strategic, very core assets, and that's why we are seeing the dynamics here and the politics being involved. Obviously, the deal and how it was announced was portrayed as a big victory to Donald Trump, but obviously that would also represent some consequences from Beijing and their own perspective. Now, the reality is how much Beijing or China can do to block the deal, it remains to be seen because it's a global deal, it's not a China deal. So I'm not sure there's a lot of question marks about how China can actually influence or block this deal. The reality is it's not a China deal, it's a very global deal. And Hutchison is not even based here, right? Even if it is a Hong Kong conglomerate, is based in the Cayman Islands. So there, we'll see how this plays out. But I think the understanding is that what Beijing for China can do to block the deal is fairly limited at this point in time.
Really fascinating stuff there. Thank you so much for joining us. That's Manuel Bagore, who leads Bloomberg's Asia-Pacific deals coverage for us. Now, we also asked Hong Kong's Financial Services Secretary Christopher Hui about CK Hutchison's deal with BlackRock. He says the financial hub remains a good place to do business without addressing the transaction directly. Hui also told us about the city's goal of adding 200 family offices this year. Let's take a listen.
Based on our survey done earlier, there are altogether 2,700 single-family offices in Hong Kong, and not counting those multiple ones, because if you have multiple family offices, likely you need to get a license to operate that. But not counting that, we already have that number. That's number one. And number two, if you look at those 2,700, in terms of the AUM being managed, about half have assets over $50 million.
It's really going all out to court this family offices, and I think you've mentioned before that you're trying to introduce 200 by the end of the year. What sort of size and geographic location are they coming from?
First of all, in terms of reaching that target, we have absolute confidence because we are very likely to exceed that by the end of this year. If you look at the number that are already being lined up, around like 1/5 are those from Europeans. Because in this rather uncertain world, I would say, people do really see Hong Kong as an anchor of stability and predictability, and that's exactly what Hong Kong has to offer at this part of the world. And in that regard, we are very confident we can hit that target.
We've seen a number of measures from easing investment thresholds to tax breaks, which not only just apply to potential family offices, but also to PEs as well as, ultra-high net worth individuals and even crypto investors. What are some of the other measures that we might see to try and counter competition from other cities? And at the same time, how does that sort of mesh with the need to expand revenue, obviously, and to plug the budget deficit?
I must say, if you look at the whole array of measures that we have provided for to draw family offices, basically it's along different dimensions. Number one, of course, tax concessions, as I just described, which we will continue to perfect. And number two is we have just launched a capital immigration scheme for people with 30 million Hong Kong dollars or more. We welcome them to Hong Kong as PR. And in that regard, the program has just been launched for slightly more than a year. And so far, we have already drawn about 900 applicants, at the same time drawing in around $4 billion to Hong Kong in terms of the assets being invested by these people. So you can see that along those lines, we are trying to use different measures in order to bring more high net worth individuals to Hong Kong. That's number one. And number two, I would say, if you look at the actual need of family offices or high net worth individuals, they are not just about money. They are also about lifestyle. They are also about how they can get a better living conditions. And that's exactly what Hong Kong has to offer.
Something that's sort of garnered a lot of attention is the CK Hutchison BlackRock deal. What are you seeing in terms of the tangible, perhaps psychological impact on bankers and lawyers in the financial services industry as well because of the deal?
As I said, Hong Kong is the anchor of stability and predictability for different parts of the world. And it has been the case before, it will continue to be the case going forward. And looking at the financial regulation, and at the same time, recently we are being named again third in terms of the Financial Center Index. And among them, we rank actually number one in investment management, in banking, and also financing.
All right, that was Christopher Hui, of course, Hong Kong Financial Services Secretary, joined us earlier, of course, in shows on the Asia trade. So yeah, some great context there on the endeavors as far as Hong Kong is looking to increase its footprint in family office. Speaking of, by the way, it's a big week in Hong Kong. We're here, of course, at the HSBC conference, and we're jumping to another conference, of course, tomorrow. So yeah, stay tuned for that. And of course, if you want to get caught up on all things HK, we have a newsletter coming out. That's every Thursday. I'm losing track of time. It's Wednesday, so that should be out tomorrow for you. Bloomberg.com/newsletters. We have more coming up here on The China Show. This is Bloomberg. You're watching The China Show. First and foremost, we apologize if you are hearing a lot of background noise. Certainly there is a lot of that right now. We are, of course, in the thick of the HSBC Global Investment Summit. We're in between sessions as well. Interesting session so far. We've heard from Mario Draghi, well attended, a lot of attention there as well. One thing that's really come up constantly and consistently so far is the uncertainty.
Yeah.
Out there. And coming from a bank itself that thrives on certainty, it tells you a lot really about that.
Almost dominated every single conversation that we've had with various degrees of confidence about the ability to deal with
see
it.
Through it, yeah.
But a lot of this sort of wait and see mentality, we heard that from, for example, Kellyanne Shaw. We also heard it from investors. Really, we're not going to know what those April 2 reciprocal tariffs look like from the US, for example, until April 2.
Yeah, and we'll have more, of course, coming up here on the shows to help us understand what to do with really the uncertainty out there. And I think we really have a good guest coming up because we're speaking with Jim Zelter, of course, out of Apollo. And, in a world where interest rates are high, returns and yields are high outside of the public markets, that's really the level of predictability they have. So we'll really see how much business they're doing right now amidst, of course, all the uncertainty out there. And is that really where you find alpha these days, of course, outside of the public markets, remain in predictable income. We'll leave you with a look at the Hang Seng Index about 90 minutes into the cash market session. There's plenty more ahead here on The China. Well, that's it from us. There's plenty more from us coming through.